Thank you. Good afternoon, everyone. So, we are starting a class which is for the which batch? Which batch are you all coming from? Because generally we see that there are various batches. So, which batch are you all coming for? This batch is specially designed for September 2025 students. And because in tax subject, right, we will have certain amendments which is specific to the attempt which you are giving. So this is for September 2025, and even Jan 2026 students can attend this, provided whatever amendments are relevant after the September exams, for which you will have a study update, that if you go through, that should be sufficient. But this batch is primarily meant for September 2025 students. So good to see so many students attending this. Very, very encouraging and very inspiring to see that, yes, the number of students in the board of studies is increasing by the day. Last batch, we didn't have this many students. This batch, we have so many students touching 100 plus is amazing. So let us start with a brief introduction. Uh, the major topic today itself is introduction. So we will have introduction about the GST in India. But before getting into the introduction of the topic, let me introduce myself because you will be with me for quite some time. So I would like you to know who am I and will I be the right person for you. So by qualification, I'm a chartered accountant and company secretary. My name is Deepak Jain. I practice as company secretary in Bangalore, which is a city in the state of Karnataka, South India. And I qualified the CA profession in November 2008. Okay. And I have been in practice since then. I was there with a firm for 2 years and then I started practice. So effectively, you could say that from January 2011, I've been in practice. And in terms of career, in terms of my experience, I've been always with indirect tax. Before I was practicing in service tax matters. And our firm is located in Bangalore. It used to do a lot of accounting, bookkeeping services, taxation services. And after GST came in, we are a full firm wherein we take care of GST matters as well. And I've been accredited along with the CA Institute as a faculty for the topic of GST. And I'm a accredited GST faculty by the Institute of Chartered Accountants of India. Okay. So that is a brief introduction. In terms of the classes, how we will go is I will take the session. And during the session, if there's any questions, I would request you to put it in the chat box. And we will have certain time slots, that is one before the break and one after the break. Generally, in between the class, we will take 5 minutes short break so that we can come back and assemble and continue the topic. So I will keep a slot wherein all the participants can raise their hands and I will unmute them and you can ask your questions so that our class has to be interactive. And trust me, I've got a lot of responses from the previous batch students. I could share that sometime, wherein they've said that yes, they were liking this topic, they were liking this subject, and my approach has definitely helped them. So some people may feel that it is really slow, few may feel it is fast. So I'll go at a place which is kind of moderate, which everyone can understand. And the general language which I use will be English. In some places, I may use Hindi, but there are generally concerns that if you talk in Hindi, then we can't understand people who don't know. But don't worry, my Hindi will not be so much that you can't understand. I will talk in Hindi and I will repeat it or do the translation in English also so that you are not anyways getting lost. So you will not feel that, okay, I am keeping you away by talking in a native subject. That is not there. My teaching experience, Raju, since COVID, I have been teaching on the Board of Studies. So since 2017, once every two times in a year, I've been teaching from 2017 to now. So you can calculate, and now it is the frequency is increased that it is 3 times a year. So you can check yourself on my teaching experience. For the materials, yes, please take the latest material. You have old material. Yes, you will have to buy new study material, because what will happen is there will be certain places where some amendments have been introduced, right? And you can take study updates, but that will not be sufficient, I would say, because you will have to compare two books. So please take the uh, thing. Okay, I will. So please take the new study material. Otherwise, you'll have to compare the old book and the amendments. So it will be advisable that you take one book and compare it. And anyways, the soft copy is available on the Board of Studies app. So you can download it from there as well if you want to compare it. Jyoti Prakash, yes, for queries, I will share the thing so that any queries you could raise it there. January 2026 exam books are not available for now. Now, I think only September 2024 books are there, so you can refer them. Okay, so we are all set with the basic guidelines. No questions would be encouraged in between, so that we will kind of take the questions at a proper given time. Okay, any questions till now? Okay. How to prepare chapter, these will have a separate discussion. How to prepare for this topic and things, study tips. Yeah, these are all the general things which will come in uh, to when a particular timeline comes in, when we have problem solving session, we will go through it that time, and there will be various time slots where we will have that time we will discuss this. For now, to start this topic, yes, this live classes on GST is only on Tuesday and Thursday. It will be from 2:30 to 5 o'clock. Okay. And I am not from the Board of Studies. I am independent of the Board of Studies. I'm a faculty, that's all. So any questions related to Board of Studies, like the some people ask when is the results going to come, all of that will be answered by the Board of Studies people itself. Okay. So any questions related to the subject and related to the topic, please restrain yourself from asking only those questions and nothing else. Yes, a WhatsApp group link, I will share it during the break. Fine. Up to which date amendments are to be applicable for September? We will go through the introduction, and then I will tell you that up till what dates your amendments are applicable. I will note down the relevant questions which has to be answered, and I will respond to them at a proper given time. So what you will have to do is you will have to attend all the sessions. So if you do not attend any sessions, then you will lose out. Okay. So don't miss on any sessions. If you miss any sessions for any emergency reasons, then you have the recordings available. Please go through the recordings then. Okay. So we'll start with today's session, which is on GST in India and introduction. Okay. So what is GST? Before GST, we need to know what is taxation. So we will understand what is taxation, and then we will understand what is GST. First, we need to understand what is tax, right? First, if we understand tax, then we can understand what is one of the type of tax, which is a goods and service tax. A goods and service tax is a type of a indirect tax. Correct? We know that. Why is it called indirect tax? Also, we'll get to know about that in a short time. But what is tax predominantly? What is tax firstly? Taxation, and why should it be paid? right? Taxes are collected by any government because the government has to run, right? Like you have a organization, you have a company. Now company needs to run. How will it run? By finances. So it will issue shares or it will sell the products. Through the product sales, it will get the funds. So all of that funds is used by the factory to buy the raw materials, to pay to the laborers, to pay to the employees, and to run the organization as well. The complete organization has to be run by the funds what is being collected. Now, once a funds are collected, it will have to appropriate sufficient amount for everything. It just cannot spend everything on the laborers and not spend anything on other overheads. It has to equally spend, right? Then that's when the organization as a whole will grow. Similarly, in taxation also, a government is called as a state. Okay. It is a welfare state. So government is called as a state, not like the individual states. The whole country itself is called as a state because that is the government which runs that state. Okay. Now, this taxes which are collected, right, or any funds what is coming to the government, they will have to spend it for various social economic objectives, right? Earlier, the government used to spend, way back, I'm saying, the government used to spend only on limited activities, nothing for the welfare. But the century is changed, the generation is changed. Now the government has to spend on the social welfare of the citizens of the country. It will have to spend on the infrastructure. It will have to spend for those welfare activities through which the citizens are happy. And if they are happy, they'll be able to work. And if they are able to work, then they will be able to generate lot of revenue for the government. Because if they don't work, right? If you don't give them a good road, then they'll not be able to transport. If they're not able to transport, then they'll not be able to work. Then they'll not be able to transport their goods, whatever they manufacture. So that's why the infrastructure also has to be good. That's the reason all of this is interconnected, right? The spending and the income, what the government gets, if they spend more, a lot of people will get benefit of that capital expenditure, and then they can earn, they can generate the employment, they can become a employers various organizations through which they will pay taxes, and that will come to the government, right? So the government has to spend. How will it spend? It can either borrow funds or it can collect revenue through taxation. So how much can it borrow? It cannot borrow everything. It will have to borrow certain portion and it will have to generate the revenue through taxation. That's why taxation is the most best option for the government, because once the taxation comes to the government, then they can utilize it. Unless they will have to refund it back, right? Unless they have to refund the taxation which has been collected is for the government, they can keep it. So that's the reason, because the government is now a welfare state, they will have to spend on public expenditures and they will have to generate on the fiscal policies. They'll have to spend a lot of money on the fiscal policies, correct? They will have to have public expenditure and they will have to have a fiscal policy to stimulate the economic growth. That is the reason they need funds for which they collect the taxation. Okay. Can we say that taxation is the charge taken by government for using facilities? You can say so. That is one of the methods. Like some countries, even now I know that Dubai did not have taxation for a long period of time. It is only in 2018 that they started VAT. Before that, there was no taxation, right? So the government was still running. They were still doing facilities. They were still uh, doing a welfare state. So their mode of collection or funding their expenditure was through fines and penalties and other things through the tourism. But now they have also moved to taxation. They have VAT also and income tax also, right? So it is up to the government how they generate the funds. The most best option is to collect the taxation, because we will see why taxation is the best option. Now, what is tax? If you define tax, tax is a burden. Wow, it's a burden. Yes, it is a burden. If somebody says you pay taxes, you will not pay it happily, right? You will feel, oh, can I avoid it? Can I reduce it? Is there some way I can do some proper method of investment so that my taxation comes down, right? So you will try all the various methods to reduce the taxation because it's a burden. If it was not a burden, you would have given happily, correct? It is a burden. It is a pecuniary burden because it involves money. Pecuniary means in terms of money, what is involved, it's called a pecuniary burden. And pecuniary means involving money. So that is a general knowledge definition of taxation. But if you see the definition of taxation, they have defined taxation as it's a pecuniary burden which is laid upon individuals and landowners to support the government, right? And it is a payment exacted by legislative authority. The payment is exacted, means it is taken out from you, from us, from the individuals by legislative authority. Very important is it is a burden, we understand. It is collected from individuals and paid to the government, and it is a payment exacted by legislative authority. Without authority, they cannot collect any taxes. They should have the authority. Now, where is the authority flowing from? For any taxation, where will the authority flow from? Because the definition says it should be exacted by a legislative authority. Now, where is this legislative authority coming from? Okay. Lok Sabha, Rajya Sabha, from the statute. See, the statute itself is not giving you the power. Statute also has to draw the power from somewhere, right? So where is the drawing from? Yes, few people have told it correctly. Ministry of Finance, no. And very few people have said it correctly. Priyanka, Bipin Khale, Amod Jain, Anubhav, Manisha. Yes, these are the people who have given the correct answer. It is flowing from the Constitution. The power, the legislative authority, that is the authority who gives you to collect, has to come from the supreme place, right? From the supreme document, which is the Constitution. So the Constitution has to say, yes, you can collect taxes on income, you can collect taxes on services, you can collect taxes on customs duty. Once the Constitution says, then the act is formed, right? Can there be an act which is formed without a constitution? Then it will become a ultra virus law, which means it is not a valid law. It will become an invalid law. So the power to tax should come from the parliament itself. Okay, when we say legislative authority, the authority has to flow from parliament, from the constitution. Of course, parliament and other bodies, what you're saying, will be involved because constitution has to be amended some cases, constitution has to get approved some cases. So if it is already there in the constitution, then an act can be filed, act can be passed. But if it is not there in the constitution, then the constitution needs an amendment. Okay. It is not a voluntary payment or donation. Definitely, we know that it is not a voluntary payment or donation, but it is an enforced contribution which is exacted pursuant to legislative authority. So, everywhere it says that it should be enforced contribution. It is not voluntary. It is a burden and it is exacted pursuant to a legislative authority. Okay, that is a simple understanding of taxation. Now, we will see how is taxation divided into. Okay. Taxation in India is divided as direct tax, then indirect tax. Okay. And then there is tax on tax. Of course, tax on tax should not be permitted, but it is there for some reason. Direct tax, the examples are income tax, agriculture tax, and corporate tax. And for Just one moment. Sorry. So we were talking about what are the types of taxation, the taxation system in India. We have direct tax, we have indirect tax. Within direct tax, we have income tax, and the taxes which is paid by companies are called as corporate tax. Of course, the law is same, right? But the taxation on corporates is called as corporate tax, and then we have agriculture tax also, right? So this you would have studied this bit in your direct taxation part, correct? Now, in indirect tax, presently what we have two types of indirect tax. One is goods and services tax, and another is customs duty. Okay, we are all aware of customs duty, right? Who is not aware of customs duty? Okay, so saying few people are not aware of customs duty. Okay, so goods and service tax is in India, right? On any transaction which we do, right? When I sell to you something within India from one state to another state, or within the state itself, when I do some transaction, then it is a transaction on which we pay GST. Now, when we export something or when we import something, then this GST will have limited view, right? Because when you import something, you can't take GST. You will have to pay customs duty, because we have another law called as customs duty. When you import something, the government at the customs frontier or the border, right? When you come from flight, at the flight, when you arrive itself, there'll be a customs officer. And when the goods are arriving into India through ship, right, there will be a bonded area, which is called as customs bonded area, where your goods has to be kept. The customs officer will evaluate, identify the duty for it. You have to pay that and clear it. Okay. So that is called as customs duty, which is payable. So when you import anything, it can't be free, because if you import something and the same product is manufactured in India, then the manufacturer will complain that people are buying from outside India. And if I am charging GST, they're not buying from me. So you can't keep any imports free. So it has to be levied on a duty on the tariff. What is tariff? The rate what you will levy is called as tariff. Okay. So when you import anything, so what I can import, I will import goods, correct? So when I import goods, there will be a customs officer who will evaluate what is the value and what is the rate of duty which will be paid. You pay that. How will you pay? You'll file a document called as bill of entry. Okay. So you will file a document called bill of entry and clear that goods. So once I clear it, say customs duty rate we see in the budget, right? So various products, various rates are there. Say for import of certain material, you have customs duty rate of 10%. So the officer will tell, okay, 1 crore is the value. On this, you pay 10%. So on that, we will pay customs duty, and we will pay GST also on that. So when we import any physical goods, we pay customs duty and GST on that product. Okay. And so this is importation of goods. But if I import services, how will the customs officer catch me? Can the customs officer still tell no, pay the customs duty on import of services? We know goods are tangible, correct? But in case of services, it will be intangible. So will the customs officer come in way when I import some services? Rajvi Ray is saying no. What do others think? Tanay is saying yes, maybe. Yes, no, yes, no. Okay, lot of confusion. Through banking transaction, that is payment, correct? I may pay later or I may pay not necessarily that I will pay immediately. I will pay later on also. So the timing will be a different, correct? So on import of goods, customs officer will evaluate, but on import of services, customs officer cannot evaluate. So on import of services, there is no customs duty. Okay. So import of goods, there is customs duty. On import of services, there is no customs duty. Got it? But is the GST leviable or no? We will understand in the next chapter. Okay. But for now, you understand that import of goods, customs duty is there, but on import of services, customs duty is not there. One of the reasons, Omkar, I'm not saying that is the only reason. That is another reason why not, that is the reason why on import you pay customs duty. GST is levied on service, yes. When you import any services, then GST will be levied on that. Okay, so understood. People have raised their hands. What is customs duty? Okay, then there is tax on tax. What about the export? Yes. So import we spoke. Export. When I import something, I pay customs duty. On export, should I pay? No. On exports, it is all generally exempted. On exports, because the country needs exports. So it will not tax any exports. So when you export something, there is no customs duty payable except for some restricted products, which the government doesn't want the industry to export. On such goods, export duty will be there, but otherwise, most of the products are out of the export duty itself. So there is no taxation on exports. Even on services, if you export, there is no GST which is payable. It is called as customs duty. It is not called as customs tax because it is a duty which is being levied, not a tax. Yes. Mosam Kumari, do you have any question?
Wait. Yes, sir.
Please tell me.
Sir, I have a doubt on a custom duty.
Yes.
Hello.
Please tell.
I am audible, sir.
Yes, yes.
And corp. Hello.
Yeah, we are not able to hear. Can you ask a question quickly?
Sir, I have a doubt on a custom duty and corporate tax.
Okay.
Yes, sir.
What is your doubt?
Doubt about the basic general knowledge, like, sir. I didn't get any from basic knowledge.
Okay. So, what is firstly corporate tax is whatever taxation you earn on your income, that is called income tax. And when a corporate means a company, right? It could be an Indian company, a foreign company. When the company pays taxation, it is called as corporate tax. Okay. So it is similar to income tax, but the taxation, what is paid by a corporate is called as corporate tax. And the tax, what we pay on, so this is a type of direct tax. Now we'll move to
Yes,
indirect tax.
sir. That is
Customs duty is a indirect tax. So when you import anything, the tax what is paid on import, that is called as customs duty. Okay. And tax on tax. So some taxation is very low and the government needs to raise funds for specific purposes. So they will levy on the tax additional tax, which could be in terms of surcharge or cess. So in our GST, we will see that there is something called as a compensation cess. So whatever losses has been borne by the states by moving from the old regime to the GST regime, to compensate that, they will collect something called as a cess. Is corporate tax and sales tax? No. Corporate tax is a type of a direct tax. So there is no more sales tax which is available now. Okay. So direct tax, when we say what is direct tax, the direct tax is when you earn income, you pay the taxes on that. That is called as direct tax. Okay. I earn my profits. I do my business. I earn the money, right? I am the user of the profit. So I pay the taxes. This is called as direct tax. That's why it is called the incidence of the tax is borne directly. Okay. And indirect tax is the tax where you pass the incidence of tax, right? You are a shopkeeper, you sell biscuit. Okay, who is consuming? The customer is consuming it. But who will pay the tax? The shopkeeper will pay the tax because it's the indirect tax. So when you sell something, you collect taxes from the other person and pay it to the government. So you are not, the incidence of that tax is shifted to another person, even though you are liable to pay the taxes to the government, but the incidence or the burden of that tax is passed on to your customer. So that is a indirect tax. So understood? Direct tax is one where you earn and you pay. You make profit, you pay the taxes. You earn your salary, you pay the taxes. That is direct tax. And indirect tax is one wherein you don't enjoy it. You are only a conduit. You are only supporting in the transaction. Ultimately, the customer is buying it, but you have to pay the taxation. That is the nature of this indirect tax. What is the meaning of incidence? The meaning of incidence is who is the person who is burdened with the tax. That is called as incidence. What about VAT, which is still charged on certain groups? Yes, on certain goods, VAT is still charged. We will come to that saying that, okay, even though under GST, old taxes have been subsumed, but for some products, such VAT is still, excuse me. So on certain products, VAT is still charged. And so that is the difference between direct tax and indirect tax. Direct tax is progressive in nature. What do you mean by progressive? As and when your income increases, you pay higher taxes. If you have 1 lakh income, you will pay taxes. Say if the rate is 10%, you'll pay on 1 lakh 10%, which is 10,000. If you earn 10 lakhs, then you'll pay more taxation and your slab also will increase. So direct tax is progressive in nature. Why is it progressive? Because as and when your income increase, your profit increases, your inflow increases, that is when your taxation also will is increase. So that's why it will go in the similar manner. If you draw a chart of the income and the direct tax, as and when your income increases, your taxation also will increase. Correct? But so what I'm trying to say is your direct tax graph will be something like this. This will be your income and your taxation will be like this. That as and when this increases, this is also increasing. Correct? This is progressive in nature because this is growing and this is also growing. But what happens in indirect tax? This is your basic, your income is increasing, but the taxation will not grow in that angle. Why? Because indirect tax is a tax which is levied irrespective of your income, right? How is it? Why am I saying so? You buy a biscuit packet, you're a student. If you buy, the taxation, what has to be paid to the government is same, and a rich man going and buying a biscuit, for him also taxation will be same. So that's why it doesn't move in the direction of the income. So it is not decided on the person's income, it is decided on the transaction. That's why indirect tax is not progressive, it is regressive in nature. Fine. Examples of direct tax is income tax, and examples of indirect tax is GST and customs duty. Well, we saw that now GST has come in. Now, when GST came in, before GST came in 2017, there were other taxation which were running in India. Okay. There were so many taxation which were all subsumed into GST. They were close to, we can see here, 10 types of taxes which were levied before GST came in. After GST came in, they were all subsumed as CGST, SGST, and IGST. So you have only one taxation, but with three different characteristics now. But before GST came in, there were hundreds of taxation. Now, GST is a tax. The full form of GST is Goods and Services Tax. Manisha's question is GST and VAT the same? We can say GST and VAT the same because we call GST in India. In some other countries, they call it as VAT. Why they call it as VAT? Because GST is also a tax on value addition and value added tax, which is levied in other countries. That is also a tax on value addition. So interchangeably, some countries use VAT, some countries use GST. So VAT and GST as a system is same, right? But in India specifically, before the goods and service tax had come in, we had a taxation system which is called as VAT. So before GST, we had VAT system. From the VAT system, we are now coming to GST system. Now, what are where the taxation which was there before, which has got subsumed now? First is excise duty. Okay, what is this excise duty? When we manufacture something, okay, when we manufacture something, we had to pay some duty which is called as excise duty. Now that is no more there. So there is no excise duty. And for all the services which were being provided before GST came in, service tax was levied. So there was service tax levy then. And there was ADE, which is called as additional duty of excise. When we imported something, today we are paying customs duty and GST. But before GST came in, we used to pay customs duty and additional duty of excise. Because a manufacturer who will manufacture in India, he will charge excise duty. But when you import, if you don't charge excise duty to him, then there will be a competition. That's why on every import, we had to pay customs duty and excise duty, which is called as additional duty of excise. Okay. And then surcharge and cess was levied. All of this is now got subsumed under CGST. Okay. Because all of these taxes were collected by the central government. All of them is got subsumed and become now central goods and service tax. When we say CGST, it is a central goods and service tax. And on local transfer, when you sell something within the state, okay, before GST came in, we were paying VAT. Okay, same like that biscuit example. When a biscuit was sold from one person to another person, he used to charge VAT. Then there was purchase tax. That is when you purchase something from outside the state, you have to pay purchase tax. For any luxury items, you have to pay luxury tax. For any entries from outside the state to inside the state, you had to pay entry tax. And surcharge and cess on that also was there, which has got subsumed as SGST. What does SGST mean? State Goods and Service Tax. Okay. And we used to have CST. What is CST? Central Sales Tax. Because what I said you in VAT, I had said you in VAT that any transaction within a state, you will pay VAT. But if the transaction is from one state to another state, then we will pay Central Sales Tax. Okay. Now that Central Sales Tax also is gone and it is got subsumed as IGST. And then we had countervailing duty and special additional duty. CVD is called as countervailing duty and SAD is called as special additional duty. So all of these taxation is now got subsumed under GST. So a lot of questions in related to this. Is GST now applicable on goods and services? Yes. Earlier we had separate VAT for goods and services for service tax for services. But now GST is applicable for all goods and services. Okay. What is the difference between excise duty, additional duty of excise, and customs duty? So these were different types of duties which have been levied. Excise duty, as you know, when you do a manufacture within India, you have to pay excise duty for the manufacture of that product. Okay. And customs duty is when you import something, you have to pay one duty called as customs duty. Now, apart from customs duty, you had to pay something more, which is called as additional duty of excise. So you had to pay customs duty, you had to pay additional duty of excise, you had to pay this countervailing duty and special additional duty. So four different kinds of taxation which you had to pay on every import. Okay. Because the equivalent duty were levied in local manufacture or local sales, that's why such duties were applicable even while importing. What is entertainment tax? Entertainment tax, what you used to pay when you go to a movie hall. On the ticket, you had to pay some duty because you're going for an entertainment event. So that taxation, what was collected on the entertainment activity is called as entertainment tax. Surcharge and cess, Kaushik, can be applicable for direct tax or indirect tax, both the ways. What is surcharge? You have, like in your income tax, you have surcharge, right? If your income is crossing certain limit, you have to pay surcharge. So that is a tax on tax. And on every income you pay income tax, you pay cess. Okay. That is called a cess. So countervailing, surcharge and cess are additional levies apart from the normal taxation. What is purchase tax? If you purchase any goods from a unregistered person, then the buyer had to pay the taxation, which is called as purchase tax. What about if taxes, municipal taxes? Municipal taxes comes outside the way. It's a different tax because they are taxation generally on properties. So they do not come into our regular taxation. CVD and says countervailing duty. Okay. So some products you cannot pay taxation. Punch. So any kind of imports when used to do, right? The like anti-dumping, some China, they have to dump something. Okay. So to avoid that such products could be dumped in India, the government used to levy called as a countervailing duty so that that goods should not be competitive in India. These goods should be not used in Indian market. That's why used to levy a countervailing duty. Okay. And there is something called as a special additional duty, which is equivalent to the VAT being charged. VAT was charged on all the products, but when you import something, if you don't pay VAT, how is that fair? Right? So it's why apart from customs duty, VAT equivalent duty was paid. That is called as special additional duty. Yes. Then there is UTGST also. Yes, even here we have UTGST Yamni. We'll go through it. So if it is a central, if it is a state, then it will be SGST. If it is a union territory, the SGST will get replaced with the union territory. That's the only difference. Is it important to know about VAT? No. So this is just to know the background. It is not important. What is CST? CST is called as Central Sales Tax, which is when you can sell goods from one state to another state. From Karnataka, if you're selling something to Tamil Nadu, then you have to levy a CST tax because VAT was there only on local purchases. That is, when you buy something within the state, then VAT was payable. But if you buy from one state to another state, then it is a CST transaction, Central Sales Tax. Okay. Now, once we understood the major taxation and what is got subsumed, now we'll understand what is the feature of this indirect tax, complete features of the indirect tax itself. Indirect taxation, the feature is firstly, it is a tax. Now, we know how indirect tax works, right? We've given you that example of biscuit. That's a typical example that the taxation is collected by one person, but paid by another person. Okay. So the ultimate consumer who consumes, he will pay, but the taxation is paid by another person, right? So first feature is it's a tax on commodities and services. It is a tax which is paid on commodities, call it as commodities or call it as goods. So indirect taxes are collected both on goods and services. Okay. Then there is shifting of burden. How there is shifting of burden? The shopkeeper has to pay to the government, but he can shift the burden from himself to the consumer, right? He will shift the burden of this taxation to the consumer. So there is shifting of burden. Then there is no perception of direct pinch. Because anyways, you're buying a biscuit. Instead of buying for 9 rupees, if somebody asks you for 10 rupees, you will pay 10 rupees, right? Because there is no perception of direct pinch. As and when you're expending, you're just paying the taxation. But in income tax, after you earn, then you have to pay. So there is a pinch. But here in indirect tax, anyways, you're consuming, and the taxation are subsumed in such a way that it becomes part of the transaction itself. Because when you see any products, now it is all given at a standard rate, 10 rupees, 50 rupees, 100 rupees. In that itself, taxation is included. So there is no direct pinch which is seen. Indirectly, it goes, but there is no direct pinch on the consumer. It is inflationary. Why is it inflationary? Because your prices of your products increases. Like I understand the when the Tata Nano came, the law for launch, the chairman of Tata Nano had promised that he will sell a car at 1 lakh rupees. Okay. But when it came to the market, the on-road price itself was 1 lakh 50,000, 1 lakh 70,000. Then there was an interview after the launch, and the person asked him, a journalist asked him, Mr. Ratan Tata, you had promised that you will sell a car at 1 lakh rupees, but now you're selling at 170. Where is your promise? So then Ratan Tata said, I had promised for 1 lakh. I could manufacture and sell the product at 1 lakh rupees, but the taxation are such that the price of the product on road is increasing. My prices is 1 lakh itself. So which means what? The inflationary effect has come in. The product which is 1 lakh rupees is now sold for 1 lakh 70,000 rupees because of the taxation. So taxation are inflationary. It increases the price of the products. Okay. That is how the effect of inflationary effect comes on the price of the products, because apart from the product, the seller will collect the taxation and the pricing of the product is getting increased. That's why it is inflationary in nature. Then there is a wider tax base because everybody consumes it. A person who is not filing income tax return, who is not having a PAN, cannot file the income tax return, but he can pay the GST, correct? Because as and when he's consuming, he is paying taxation. So it has a wide tax base. Even knowingly, unknowingly, every person is paying taxation. So it has a wide tax base and it promotes social welfare. How does it promote social welfare? Any idea? How can taxation promote social welfare? by providing subsidies, by providing infrastructure. That is all spending. Okay, once they take taxation, they will spend it. So for every taxation, we have it. But specifically for indirect taxation, how is this promoting social welfare? Yes, Mohan has told the correct answer by charging high tax on sin goods. Okay. So the government will levy more taxes on cigarettes, tobaccos, alcoholic products. Why? Because those are all sin goods. So if they collect more taxes on them, then their consumption will come down because, as we know, taxation has an inflationary effect. If you charge more tax, the prices of the product will increase. So that will discourage somebody to go and chew tobacco. So that's why one of the features of indirect taxes, it's promoting the social welfare. And it is regressive in nature, that we know that through the graph, that as and when the prices increases, my taxation doesn't go, my taxation still goes down itself. So that's why it's regressive in nature. And the last important feature is it is an important source of revenue, right? It also helps to avoid all unnecessary taxes. Perfect. So it is an important source of revenue to the government. Both direct tax and indirect tax collections, if you see, they are going in par. So both direct tax and indirect tax are an important source of revenue to the government. Now, how does this GST start? There is a diagram. This diagram, the diagram what is there in your book is little different. This is a little different, but the years mostly remains the same. We just know that the GST came in 1st July 2017, but it did not just came in like that. There was a lot of history before this came in. They had to do lot of changes. The important thing what they had to do is get consensus of the Lok Sabha and the Rajya Sabha and get the constitution amended. Why constitution amendment was required? We will see at the end of this session. At the end of this chapter, we have constitutional aspects of GST, but understand the flow. How did this happen? It didn't start in 2016 and they passed it in 2017. No, it started way back in 2000 itself or 2006 when the Vajpayee government started discussion on GST by setting up a empowered committee. So way back in 2000 itself, they wanted to bring GST, so they set up an empowered committee. Then in 2006, okay, after the empowered committee was set up, they had to study, analyze, and read. And in 2006, during budget, for the first time was made announcement to GST for the first time was made to the then Union Finance Minister during budget of 2007-8 that it would be introduced from 1st April 2010. So they had proposed in 2006 that we will introduce in 2010. Then in 2009, first discussion paper was issued. Then in 2011, the Constitution 115th Amendment Bill was introduced, which means that there had to be some changes made in the Constitution. And 2011, they brought in that bill. But was it approved? No, it was not approved. And that got lapsed because every bill has some validity period. It has to get passed by both the houses of the parliament. Otherwise, the bill will get lapsed. So that is what happened in this case. The bill was lapsed because it was not passed. Then in 2013, they knew that we had to form a GST anyways. So they formed GSTN, which is Goods and Service Tax Network. So they formed a company called as Goods and Service Tax Network, which will act like a backbone for the GST infrastructure. Then in 2014, the 102nd Constitution Amendment Bill was introduced. So this was the bill which became an act. So they introduce a bill. After the bill is passed by the Lok Sabha and the Rajya Sabha, then it goes to the president for his assent and he gives his assent. Okay. So in 2014, the bill was introduced. What was the bill number? It was 122nd Constitution Amendment Bill, right? And that bill was passed finally in August 2020, August 2016. The Constitution 101st Amendment Act was passed. Okay, so a act which was a biggest hurdle, the Constitution Amendment Bill the Constitution Amendment Bill got changed as Constitution Amendment Act. This act is called Constitution 101st Amendment Act. The bill is called as Constitution 122nd Amendment Bill, but the Constitution Act is called as Constitution 101st Amendment Act. And then 2016, when the act had come, we knew that GST will definitely come in. So there was quick things which were happening after August 2016. That is, in September 2016, first GST Council meeting was conducted, right? Because they said that everything in GST will be approved by the GST Council. So फिर GST Council 2016 में आ गया था. फिर 2017 what happened? GST Council was there and it used to recommend a lot of things. So it recommended that we will have a CGST and SGST, UTGST and Compensation Act. So they formed these acts. Okay. So all of this in April 2017, the CGST, IGST, UTGST and Compensation Acts were passed. The bill were passed as acts. So then basis this, we have what all we have: CGST Act, IGST Act, UTGST Act, SGST Act and Compensation Cess. And in May 2017, the GST Council recommended the various rates. And in June 2017, all the states except Jammu and Kashmir passed their SGST Act. All the state also has to pass, right? Because you have CGST and SGST. CGST will be passed by the Lok Sabha and the Rajya Sabha by the Parliament. But SGST Act is specific to each state. So the state has to pass it. So by June 2017, all the state has also passed the GST. And in 30th June, then the final GST Council meeting happened. After that, from 1st July, GST was launched. So it took so many years to launch the GST, right? After the bill was introduced in 2014, making that as an act, and from the act, doing a lot of things to make the effective date 1st July 2017, GST was launched. Later on 8th July, all the states had been passed, but Jammu and Kashmir had not passed, right? But then Jammu and Kashmir also had passed in, and they also became part of that GST council, that they will also adapt the GST. Earlier, the state of Jammu and Kashmir, the parliament of Jammu and Kashmir, the houses of the Jammu and Kashmir did not pass it, but later on the 8th July, they had also passed. So GST is leviable even in the state of Jammu and Kashmir. What does the 115th and 122nd mean? 122nd Amendment Bill means that there were various bills, but in the 122nd bill only this was passed. So it is relevant from an examination perspective that if they ask you a MCQ, the Constitution Bill was introduced in Lok Sabha through which Amendment Act? And then the act had come in. It is not 115th, Nilesh, it is 101st. So on the Constitution 101st Amendment Act was this bill got converted into an act. Yes, Jammu and Kashmir. Yes, Radhika, for Jammu and Kashmir also, how you pay taxes here. Similarly, same taxes has to be paid in Jammu and Kashmir as well. Very few dates, Manisha. So you can remember this 2014, 2016, not otherwise, other things. And in 2014, which act? In the 122nd Amendment Bill, it was introduced, and 101st Amendment Act, the GST law got passed. Other changes in the Constitution was approved. More than the law, it was the changes in the Constitution that was approved by the bill. Yes, 2014, 122nd Amendment Bill, and 2016, 101st Amendment Act. You're right, Priyanka. Lavanya, this flow is important from a, I would say, multiple choice question perspective. Okay, let's see more about GST. What is more about GST? GST is also called as a VAT in some countries. Somebody had question. Yes, it is a tax on value addition. GST is what? GST is a tax on value addition. Similarly, in some other countries, they call it as value added tax. So you can call GST or call it as VAT. GST is introduced in around 160 countries. France was the first country to introduce GST in 1954, and most countries follow the unified GST model. What is unified GST model? Which means one taxation for the whole country. But Brazil, Canada has dual taxation. Even in India, we have dual taxation, dual GST. That is why when you do any intrastate transaction, what is intrastate transaction? इंट्रा स्टेट मीन्स विद इन द स्टेट. जब भी आप स्टेट के अंदर कुछ ट्रांजैक्शन करते हो, तब आप क्या पे करते हो? CGST और SGST, क्योंकि आपका मॉडल ही ऐसा है, डुअल जीएसटी मॉडल, कि जो आप विद इन द स्टेट ट्रांजैक्शन करोगे तो फिर CGST और SGST लगेगा, और अगर इंटर स्टेट कुछ ट्रांजैक्शन करोगे तो IGST लगेगा. So that is the dual GST model. That is on the same transaction, you are paying taxation one part to the central government and one part to the state government. Got it? That is about the GST model in India. Concept of GST in India, it is a value added tax, which means it's a tax on the value addition. आपको पूरे के ऊपर टैक्सेस नहीं लिए जाएंगे, आपको पूरे के ऊपर टैक्सेस लेके जो आपने परचेज कर दिया उसका टैक्सेशन का बेनिफिट आपको मिल जाएगा. तो अल्टीमेटली आप जो वैल्यू एडेड करते हो, ठीक है, सपोज इफ यू आर सेलिंग समथिंग एट 100 रुपीज एंड यू हैड ब्रॉट द प्रोडक्ट एट 80 रुपीज, so what is the value addition in that case? Correct. The value addition is on 20. So will the taxes be paid on 20 or 100? The taxes will be paid on 100 itself. My question, Chandana and Yamini, was if I bought something at 80 rupees and sell it at 100 rupees, then will I pay? When I say taxation in GST is on value addition, right? It is a value added tax. So, I should pay taxes on what value? I should effectively pay taxes on 20 rupees. But how the system works is on 100, you collect the taxes, and whatever taxes you have paid on 80, you reduce it. So effectively, वही हो गया. On 20, you are paying taxes. The mechanism is different. You collect on 100 and remit on the balance. That is, 80 जो already pay कर चुके हो आप, you will reduce that, and on the balance, you will pay the taxation. Correct? So concept of GST in India is it's a tax on value added. It is on the value added. That's why it's called as value added tax. It is a continuous chain of tax credits. Why? Because when I say I have paid taxation on 100 and my supplier has paid taxes on 80, that is a credit for me. I will utilize it and pay the balance to the government. Similarly, when I sell this 100 to another businessman, he will buy this at 100, and the taxes what I charge, he will claim that as a credit. So it's a continuous chain of tax credits. I will sell to A will take the credit, A will sell to B will take the credit, B will sell to C will take the credit. The flow continues. So it is a continuous chain of tax credits. It is ultimately when the credit will stop, when a consumer comes in the picture, that the ultimate burden is borne by the final consumer. So the consumer who buys it, he cannot pass on the credit to anybody. So whatever value added chain, the chain was there, will ultimately, when A sells to B, B sells to C, and C sells to the ultimate consumer, then the consumer will pay the full taxation. He cannot claim the credit. Got it? And there is no cascading of taxes. मतलब tax के ऊपर tax नहीं है. If I have purchased something, I can claim the credit. And what I'm selling, I will pay the taxation. So there is no cascading of taxes in GST in India. Now we'll take a break here, or we'll open up for questions. Then I have a Excel calculation to show you on VAT and GST calculation. That how was the calculation in GST? How was the calculation in VAT, and how was the calculation now going to happen in GST? Any questions till what we have studied till now? Abhishek, do you have any questions? So whatever budget we had in 2025, which was just completed on 1st February 2025, that will not be applicable for you. So don't raise any questions related to budgets. That is not relevant for you. Please re-explain cascading effect. I'll explain the cascading effect through an example. Then you will understand what is cascading of taxation. On one commodity, there will not be two different rates if the rate is 18%. Okay, the rate fixed for a product is 18%, which means when you do a interstate transaction, you will charge 18% IGST. And if you sell it within the state, half of it you will charge CGST, half of it you will charge SGST. So there will not be different rate, it will be equal rate. Okay, so let me unmute one by one. You can ask your question. Mm,
Hello.
yes, please.
Sir, can you please explain that example again, which you gave in value added tax?
Right. So that 100 rupees and 80 rupees.
Yes, sir.
So I bought a product for 80 rupees and I'm selling the same product at 100 rupees. So how much is the value addition I have done on this product?
20.
20, right? So when you say value added taxes, should pay taxes on 20 rupees and be happy with it. Correct? So it can be 20, but the system works in such a manner that you pay taxes on 100 or you collect taxes on 100. But when you remit to the government, you don't remit taxes on the full 100. You remit it on the 100 minus 80. So 100 minus 80 is effectively 20. Correct?
Okay,
So
sir.
you pay the taxes on the value addition on a total calculation basis.
Okay, sir. Got it.
Thank you. Nilesh?
Sir, my question remains the same. In the journey of the GST, the 1001 Amendment Act and the 122nd Amendment Bill, from where this number comes, 122nd and 101 Amendment Act, means how
It is
you
like a
construct.
index, right? Whenever any bill is introduced related to constitutional amendment, it has to be serially numbered, right? So when a bill is introduced, because GST is one part in the constitution, there are so many parts in the constitution which the parliament wants to make amendment. So whenever they want to make an amendment, they will introduce through a bill. So say the last bill was 110th bill. So next change what they want to do will be through a 111th bill, right? So each and every time the bill is introduced, it will chronologically be numbered. Okay. But if you see 122nd bill got changed as 101st Amendment Act, how can the number go down? Because some bill is introduced, but it is not converted into an act. So the bill is got exhausted and the act numbering will be different. So whatever changes they do, it means from the date of the constitution till 2016, there were 100 amendments in the Constitution. And this is the 101st amendment which is happening to the Constitution. So the bill is introduced. If it gets converted, it becomes an act. Okay. Nagaratna.
Good afternoon, sir.
Good afternoon.
Sir, I have one doubt. What do you mean by purchase tax, sir? Please explain.
So whenever you buy from an unregistered person, that if there is a farmer, he is not registered, but you are buying, GST came in, you on certain products, they say when you purchase some products like tobacco, cotton, you buy, you have to pay taxes on them. The supplier will not pay. That was called as purchase tax.
Okay, sir. Thank you.
Kunal.
Hi, sir. Good evening. Good afternoon, sir.
Good afternoon.
So, yes, that point, the continuous chain of tax credit. For example, if I take an example, if I bought a goods for 100 rupees and it says the tax is 18%, so the total value is 100 or 18. Then I sell the good with a margin. For example, my margin is 105, and on the tax is 18%. So the final amount is 101, 119.8. So the difference is I will tax 18, credit is 18. So the difference amount is that's around 1.8. So I have paid to the government by the consumer. That's it.
Correct. Correct. Correct.
So that's a continuous the credits we avail from our supplier.
Correct.
So okay, so I'm just want to confirm that I'm getting the point right or not. This.
Yeah, you're right.
Thank you, sir.
Nikhil Prajapat.
Good afternoon, sir.
Good afternoon.
Sir, what is the difference between duty and tax?
So, taxation is one where you can take the credit of this, right? When you pay some taxation to somebody, that can be creditable. So that is called as taxation because the government has the power to give you the credit of tax. But in case of a duty, you cannot claim the credit of the duty. It is just paid and it can get reduced. It can go for a lower duty or higher duty, but you cannot get credit of that. That's why it's called as a duty and not a tax.
Okay, sir. Thank you, sir.
Tenmoli?
Yes, sir.
Yes.
Good afternoon. Sir, can you please explain again the surcharge and cess, sir?
Explain, sorry.
Surcharge and cess.
Surcharge and cess. So what is surcharge? Is a tax on tax. Both are tax on tax itself. Some surcharge will be like cess can be equivalent to the tax rate itself. Like you have compensation cess. Now that cess is levied on the value of the product itself. That is called as cess. But surcharge is, say you have income tax of 25%. On that 25%, there is a surcharge, right? So that is called as a surcharge, and cess can be a tax on the tax. That is the difference between surcharge and cess.
Yes, sir. Thank you, sir.
Thank you. Okay, last one or two questions. Then we'll take a break for 5 minutes. Harinath Reddy.
Good afternoon, sir.
Yes.
Hello. Is it
Good
audible?
afternoon. Yeah.
Yes. Yeah. In direct taxes, there is a surcharge and cess system. Is the same kind of taxation GST?
No, in GST, we have only one cess called as compensation cess. Otherwise, GST rate is the rate. And on certain sin goods, certain luxury products, cess is levied. So in surcharge and cess in income tax is a tax which you have to pay on the tax itself. But in GST, say when you buy a vehicle, you buy a car, on this value of say 10 lakh rupees car, you will pay 28% tax and 12% cess. So the cess here is on the value of the product itself. So to that extent, there is a difference.
Okay, thank you, sir.
Mohammed Parvez.
So, in paper number 3, we have only two subjects, income tax and GST. We will not read another,
Board of Studies related question, right?
no, actually, we have only two, in paper number 3, we have only two subjects, income tax and GST. Okay?
Correct.
We are
Customs
not.
duty will be there in your finals.
Okay, this is that. And there is no agriculture taxes.
Indirectly, it is there. If you see your direct tax paper, your agriculture income is added to your non-agriculture income computed, and then you compute the tax on agriculture. So indirectly, there is a tax on agriculture.
Okay, and the question will be based on the 1962 Act in income tax.
I am not aware of income tax thing. Yeah, but the new act is not yet passed, so it will still be 1961 Act itself. Yes.
Okay, and the GST will be as per last implement.
2017 Act with all the amendments made 6 months prior to the exam date.
Okay, which we have in that book only.
Correct.
Okay, sir. Thank you.
After this book, you will have some statutory updates. So they will have a statutory updates for May 2025. That also has to be read.
Actually, we have the latest version, so we need any other reference.
Yes. After that also there are generally notifications and circulars which have been issued. So that also you'll have to keep in your mind.
Okay. Thank you. Thank you very much, sir.
I will explain continuous chain of tax credit through an example, Shreya. You will understand that better there.
Hi, sir.
Yes. Yeah, Kunal.
Yes, sir. Sorry for asking a question again. I just want to know a question in mind that if our supplier is not registered in GST, because in India, the lots of business on a small scale, they're not registered in GST, then how can we claim the GST on that time?
So when you buy from an unregistered person, he will not charge you GST. So if he is not charging you GST, you will not claim the credit of it. If you pay somebody, then you claim it. If you have not paid
But
to him,
on that time of selling the goods, we have to pay the tax, no? But
not
ultimately
necessary. When
consumer
we
paying
come
the
to
tax.
the registration, we'll come to know that there is a threshold limit. If you cross the threshold, then you pay. Otherwise, you don't pay the GST.
Okay, sir.
Uday Kumar.
Sir, could you please explain AD tax?
Yeah, additional
TGS
duty of
AD.
excise. So when I manufacture something in India, I have to pay excise duty. Now, if somebody is not buying from me, he is importing directly. Now, if he imports, they will not pay any excise duty because they does not manufacture. Correct?
Yes, sir.
So to equate that, when they import, they will pay customs duty plus this additional duty of excise, which is equivalent to the central excise duty.
Okay.
That is called as additional duty of excise.
Okay, sir. Thank you.
Okay, we'll take a break over here for around 5 minutes and we'll come back and continue the session. You'll have to watch the video because we have spent considerable amount of time on this. So you have to be specific in your question. You cannot say I didn't understand GST. That will not be acceptable because we have been spending. We are going at a very slow pace initially. So if you didn't understand anything, you'll have to rewatch the video unless there is any specific question which I can take up.
Okay, sir. Then continuous chain of tax credit.
Correct. So when you buy something, you will get credit of this. And when you sell something, the buyer will again get the credit of this. So in the GST, the concept is the credit chain, that when I buy something, I get credit. When I sell something, the buyer gets credit. This chain continues. This is called as continuous chain of tax credit. Okay.
And like a purchase and sales, like.
Correct. Correct. When you purchase something, you pay taxes to the seller. Correct. To your vendor.
Yes.
That taxes is a credit for you. When you sell to somebody, that becomes a credit for some other person.
Yes, sir. I got it.
So to understand that better, I'll share with you an Excel sheet. Just tell me if it is visible.
By an example.
Yes, I'm just giving that example. So what used to happen before GST? Okay. What used to happen before GST, we'll see here. There was a manufacturer. Now this manufacturer used to manufacture his products and sell at a value of 10,000 rupees. Okay. On that, we are talking pre-GST, right? We are talking pre-GST. A manufacturer used to sell at 10,000 rupees. He used to charge excise duty at 10 rupees, 10%, which is 1,000 rupees. And then he used to charge VAT also, because pre-GST we had excise duty and we had VAT also. So he used to charge excise duty at 10% and VAT at 14.5%. Note 14.5% is on what value? 14.5 is not on 10,000. 14.5% was on value, sale value plus the excise duty. So VAT had to be charged on the value including excise duty. So VAT had to be charged at 14.5% on 11,000 rupees. This is called as cascading of taxes, wherein you tax another legitimate tax on the first tax also. Rightly, it should be 10,000 on that 14.5%. So it should be 1,450. But VAT said, no, nothing doing. Whatever is the value you come to me by charging any other tax, on that I will charge VAT. So there used to be tax on tax apart from surcharge and cess. So this is called as cascading of taxes, that is tax on another tax. So VAT at 14.5% was levied, and ultimately he used to sell at 12,595. Now manufacturer will sell to a distributor. Now distributor, he will sell whatever is his pricing, because he cannot claim credit as an excise duty. So this was not a claim of a credit which was available for him. He would not get credit of 1,000 rupees. So his pricing will become 11,000. This 1,000 will become his cost. So his sale value is 15,000 rupees. VAT he will again charge, because any person who's selling from one person to another person has to charge VAT. So he will charge VAT on 14.5%. Now, when he is to remit 2,175 to the government, he will reduce the input. Can he reduce 1,000 rupees and 1,595? No, he cannot, because he is not a manufacturer. He is not charging anybody excise duty. So excise duty will become a cost, to become a blockage for him. And he can claim only credit of 1,595. Okay. So this is how the system used to work before GST. Then the distributor will sell to a retailer. Retailer, say his sale price is 18,000 rupees. On that, he will charge VAT and he will claim credit of 2,175. So he will get credit of VAT, but he will not get credit of the excise duty. Ultimately, customer will pay how much? 20,000 plus 2,610. 20,610 will be the price for the ultimate customer. Okay, this includes value addition, tax on tax, excise duty, everything. Now we'll come to post GST. In post GST, how it will work? Same manufacturer. For him, the sale price will be same because he was selling at 10,000 pre GST. In post GST also, he will sell at 10,000 rupees. Excise duty is not there, so he will not charge excise duty. He will charge GST. So that is the complete shift pre GST and post GST. There were two taxes pre GST. In post GST, there's only one tax, CGST at 5%. Of course, you have CGST and SGST, fine, but ultimately it is 5% itself. If you say it is intrastate transaction, you will charge for 2.5% CGST, 2.5% SGST. The calculation will be same. So your sale price will be 10,500. Now we are giving to a distributor. Distributor will sell for 14,000 because his costing is coming down. So he will sell at 14,000. He will charge GST again at 5% and he can claim the credit. Earlier, manufacturer used to charge excise duty that was not available as a credit to a distributor. But now the distributor can claim the credit of full taxes charged by the manufacturer. So I will reduce 500 and I will pay 200 to the government. So this is how somebody was asking, please explain me the value addition, how it works. This is the credit flow. And taxation ultimately is on how much is his margin? 14, right? 14 minus 10. On that, he has to pay taxes. He's paying on that itself. Ultimately, he's collecting 700. He's reducing the input tax and paying 200. Similarly, the flow continues from distributor to retailer. Retailer is selling at 17,000. He's charging GST. He will claim the credit, which is charged by the distributor of 700 rupees. Net amount he will pay to the government. And ultimately, the consumer's cost is reducing. Earlier, it was 20,610. Now it is 17,850. Just like a ITC, correct. It is like a ITC. If you understand this concept, then you will understand the GST, the chain of credit, the input tax credit, the flow of credit. Clear with this? Any questions on this? मैन्युफैक्चर का नहीं समझ में आया. मैन्युफैक्चर का कौन सा समझ में नहीं आया? प्री जीएसटी या पोस्ट जीएसटी?
So please once again explain, sir.
If you ask once again explanation, other students who have understood, they will get impacted. So please be attentive. Okay. This is the last time I'll be explaining duplicate times, because making duplicate, which means all the students will have to wait for the second explanation. Okay. So I'll just explain this in brief. A manufacturer in the pre-GST, he used to sell at 10,000 rupees. That is his selling price. On that, he will charge excise duty because he is a manufacturer, and a manufacturer has to charge excise duty. So this is all pre-GST. Before GST, GST आने के पहले क्या होता था और GST के बाद क्या होता था, ये हम देख रहे हैं. So first we'll see what is pre-GST. A manufacturer will charge excise duty and he will charge VAT also. Okay. So ultimately the price to the distributor is 12,595. Now the distributor, when he sells something, can he claim credit of this excise duty? He cannot claim, because from one manufacturer to another manufacturer, when you're supplying, then that manufacturer can claim the credit. Because excise duty is going to the central government, VAT is going to the state government. Central and state coordination was not there before. That is the reason the excise duty was not claimable as a credit to a distributor. So 1,000 rupees tax is his cost. Okay. So he will only charge VAT because he is not a manufacturer. He is only a trader. Distributor means he's buying and selling. He will charge VAT at 14.5%. For him, he will get credit of 1,595. That is the tax which is charged by the manufacturer. Ultimately, 2175 minus 1595 is the tax which he will pay to the government. Why? He's collected 2175. He should pay full taxes to the government? No. He is collecting 2175. But out of that, 1595 he's already paid to the government indirectly through the manufacturer. So that he will reduce and pay to the government only 580. Similarly with the retailer also. First now in GST, sale value is 10,000 rupees. There is no excise duty. GST he will charge at 5%. This 500 rupees is a credit available to the distributor. The distributor will collect 700 from his customer who is a retailer, and he will pay to the government only 200 rupees. Is pre-GST calculation important for examination? Not important for examination, but important for our understanding. How do you calculate the rate? Luckily for your inter-level, there is no requirement to find out the rate. In your final, you will have the rate because there is a rate schedule for each product. They will have a rate notification. In that rate notification, you have to go and search the rate for your product. Now clear with the credit flow, how it happens? Awesome. What is the difference between GST and 9C? We'll come to that later on. Okay. Now we'll discuss on our slides. So now we understood all of this. I've taught you what is value added tax through the example. Continuous chain of tax credit. Burden is borne by the final consumer because that final customer, when we saw, he is not getting any credit. He is bearing the tax, and there is no cascading of taxes. In pre-GST, there was tax on tax, and the customer, the distributor cannot claim credit of the excise duty. So that is cascading of taxes. Tax is paid, but I cannot claim the credit. That is called cascading of taxes. In GST, no such thing. Supplier is charging me 5%, supplier charging me 18%. I will get the full credit of it. No problem. So there is no lossage of taxes. There is no tax on tax. That is the meaning of cascading of taxes. Clear now? Now, what were the deficiencies in the VAT system which helped you to come to the GST? Why is this irrelevant, sir? VAT system is gone. No, but that is relevant because simple reason. If you know what is the deficiencies in the previous system, you will make a good system. And second important reason is this can come in your exam in anything. It can come as a MCQ. It can come as a part of a thing. It is part of your syllabus, so we have to read. Correct, but it is otherwise also generally good to know what was it before and what was it now. It is in the VAT system, there will double taxation of single transaction. Like I'll give you examples. Software industry. Earlier software was goods or services was not very clear. Even today it is not very clear, I will say. But in GST, they have made it clear. But there are a lot of cases going on to discuss or judgments has to be passed whether software is goods or services. Right? So that's why a lot of software companies used to play very safe. They said, I will give you software. Not small softwares we're talking. We're talking of big softwares where big companies buy software for their operations. They buy big ERPs. They buy SAPs. Okay. They will pay lot of money, 30 lakhs, 50 lakhs for the software. Now the supplier will tell, I will not only collect the service tax on it, I will collect VAT also. So they used to collect VAT and service tax both. That was the trouble under the VAT system because VAT authorities will come tell this is software is a goods, pay me VAT. Service authorities will come, service tax authorities will come, and they will pay me service tax on it. So there used to be double taxation because the supplier will not take the risk. He will tell, okay, customer will bear the burden. That's why there were double taxation in software sector, even in construction sector also. Construction, what used to happen when you do a construction, goods also you're supplying, service also you're doing. What service you're doing? You're doing the service of construction activity. So on that you have to pay service tax. The system was in such a way that you tell 30% you will get deduction of the services, and service used to tell you will have to pay, you will get 30% deduction of the goods. So 70% of the value for goods, 75% of the value for services. It means what? 70 plus 70, 140. You are selling at 100 rupees, but you are paying taxes on 140. So that was the deficiency under the VAT system, which led to bringing the GST. Then no SENVAT after manufacturing stage. We have seen that no, the manufacturer, when he's charging excise duty, that is also called as SENVAT, because any person who is a service sector or who is manufacturing, he can claim the credit. The value added taxes under central excise used to be called as SENVAT. Now that SENVAT was not available as a credit to any person other than a manufacturer. If I am a manufacturer, I will charge excise duty to you. You are a manufacturer, you can claim credit. But if you are supplying it to anybody else who's a non-manufacturer, he cannot claim the credit. Okay. Then there was no set off of SENVAT and VAT. SENVAT includes excise duty and service tax. So very important, this point is a service provider is providing service to a trader. He is charging service tax. That trader, he is dealing only in goods. He cannot claim the credit of this service tax. Understand? A businessman will take the services of a business of services also. He should be given the benefit of taking the credit of this tax which is being charged. But the government said no, service tax and excise duty is charged by the central government and VAT is charged by the state government. We will not give you any fungibility. We will not give you any credit across. Which means what? When a VAT dealer will sell papers to a chartered accountant, paper is useful for a chartered accountant to print the audit reports. On that, he will charge VAT. 500 rupees he is buying a paper. On that, 5% is VAT, 105 rupees. For a chartered accountant, 5 rupees credit was not available. He is a service provider. He is not under VAT. So his costing used to go up. That 5 rupees becomes a loss for him, becomes a cost for him. Okay, so VAT was not fungible with services and services was not fungible with VAT. हिमांशु's क्वेश्चन है सर अगर हम गुड्स एंड सर्विसेज 2 नंबर अवेल करते हैं तो दोनों पे टैक्स लगेगा, अगर लगेगा तो सर डाउट टैक्सेशन हो जाएगा एंड जस्ट लाइक वैट एंड सेनवैट. लेकिन आपका रजिस्ट्रेशन आप ऐसे नहीं ले सकते हो. आप क्या कर रहे हो? अगर आप चार्टर्ड अकाउंटेंट हो, आप प्रोवाइड कर रहे हो सर्विसेज, तो आप वैट के अंदर रजिस्ट्रेशन नहीं ले सकते हो, क्योंकि आपका अल्टीमेट बिजनेस क्या है उसके हिसाब से आपको रजिस्ट्रेशन मिलेगा. ऐसा नहीं कि आपको जो चाहे वो मिल जाए. ठीक है, तो आपको क्रेडिट नहीं मिलेगा और रजिस्ट्रेशन भी नहीं मिलेगा. Non-integration of VAT and service tax, similar to SENVAT and VAT, what we are speaking. Then non-inclusion of local levies in state VAT. We had discussed that what is entertainment tax and luxury tax. Entertainment tax is for all entertainment activities. Just say when you have to go for a movie, they will charge you VAT and entertainment tax. And if you're staying in a hotel or resort, that's a luxury. So luxury tax used to be levied. Now, a VAT dealer who is not providing services, VAT is levied by the state government itself. Now, still, in spite of VAT being levied by the state government, entertainment tax was not creditable. Luxury tax also was not creditable.
Hello, sir. Actually, my doubt is in that post GST slide. Can you please show that slide once again?
Please ask your question.
So actually, sir, in the post GST in this distributor, so the GST is 700 on the value of 14,000, and
Correct.
he is getting the credit of 500. So my question is, what the government will get? The government will get 700 or 500, or the difference between the numbers?
See, the government ultimately has to get 700. 500
Okay,
is already gone to the government by my vendor.
okay.
Correct.
Through the
So balance, how much
manufacturer.
should the correct through the manufacturer? The government has already got 500.
Okay, sir.
So what should be the balance which should go to the government?
200.
So 200 will go from the distributor to the government.
Okay, sir. And the same will be applicable for the retailer as well.
Correct. So
Okay,
that
sir.
is the
Thank
chain
you.
which we follow. Another question which is relevant is Omkar's question is, sir, professions have to pay tax under PGBP and GST also. There are two different aspects. GST is a tax on a transaction and income tax is a tax on income. Okay. So if a profession charges GST, he's not paying from his pocket. He is collecting from the customer and paying to the government. So he's only acting as a conduit, right? He is not paying tax on his income in case of a GST transaction. Correct? But in PGBP, whatever profit he earns, on that he pays the income tax. So there are two different aspects. This cannot be questioned that, sir, on the same transaction, we are paying two things. No, we are not paying same transaction, two things. On the same kind of a transaction, we are paying two different aspects. So that is called as a aspect theory. On a same transaction, there are two different aspects. One aspect is income, on which you're paying income tax. On the same transaction, the second, so aspect of service, you pay GST. On the aspect of income, you're paying income tax under PGBP. Right? Then there were cascading of taxes, which we had explained it very well. There is levy of non-vatable CST. We had spoken about VAT was a credit from the distributor to the retailer, from the manufacturer to the distributor. But if one person charges CST, what is CST? We had discussed on CST, right? What is CST full form and what is the nature of CST? Just don't tell me the full form. Tell me what is the CST levied on? Correct. On CST, everybody knows that it is central sales tax, very good. But it is collected on what? It is a tax levied by central government on the sale of goods. What sale? Interstate sale. Correct. Good. You're paying attention. On any interstate sale, CST was levied. So if the distributor was in one state and the retailer was in another state, he will not charge VAT. He will charge CST. Now that CST was not available as a credit. Because same thing, government used to tell CST is levied by the central government and VAT is levied by the state government, no fungibility. So CST was not a credit. That is another instance of CST. Okay, that is another instance of cascading of taxes. Then next aspect is inclusion of SENVAT in the value of imposing VAT. Like how we had seen, manufacturer will charge SENVAT and on that you will pay the taxation again. So you will inclusion of SENVAT in the value of imposing VAT. That is another example of taxation. What is SENVAT full form? Central Value Added Tax, which comprises of what? It comprises of excise tax. It used to be culmination of two taxes, excise duty and service tax, both put together was called as central value added tax or CENT. Praveen is giving a good example for CST, central sales tax, interstate sale. That is, example is Karnataka to Tamil Nadu, any sale made, then you will charge CST. So these were the deficiencies under the earlier regime of earlier VAT system. Framework of GST. So because of those deficiencies, we have GST now. GST, the framework of GST is very simple. It is a dual GST, which means when you have interstate, first let's talk about intrastate transaction. What is firstly intrastate transaction? I also forgot to tell you introduction part. This PPTs will be made available to you, but these are prepared by me. So you are digesting something which I have prepared. But for you to digest, you have to prepare your own notes. So while we are taking class, you have one notebook to note down the important pointers so that your notes you will able to digest faster than my notes. So that's a humble request that have a notebook for whatever important pointers we are discussing so that when you revise these presentations, it will be very helpful for you. So it is a dual system. इंट्रास्टेट का मतलब क्या हुआ? Within the state, correct? So intrastate means within the state. Okay. On a transaction within the state, what taxes will be levied? On an intrastate transaction, CGST and SGST will be levied. Okay. And if it is a interstate means outside the state. Example, sale from Karnataka to Maharashtra. Sale from Rajasthan to Delhi. It could be for goods or services. Anything. If it is outside the state, it is called as interstate sale. On this transaction, we will levy IGST. Okay. This is a dual levy because within the state, the transaction is one, but you're levying two taxation. That's why it's called as dual GST. Clear है यहाँ पे? In CGST and SGST, who gets the tax? Very good. So CGST stands for Central Goods and Services Tax. So Central Goods and Service Tax portion goes to the central government. And SGST means State GST tax. So in Karnataka, when I sell something, I will charge CGST and KGST. What is this KGST? The state where I am supplying from, that state will collect tax. So instead of SGST, I will call as Karnataka Goods and Service Tax. So that half portion will go to the state government. And IGST, full amount goes to the central government. So in case of an intrastate transaction, half to the center, half to the state. In case of an interstate transaction, fully IGST goes to the center. And IGST stands for not interstate goods and service tax. It stands for integrated goods and service tax. Okay. And if I do any transaction intra-union territory, UT means union territory, which is within a union territory, then I will charge CGST plus UT GST. And if I do inter UT to a state, then it is IGST. And from inter UT, that is from one union territory to another union territory, which is outside my union territory, then also I will charge IGST. Clear? So in case intra-state or inter-union territory, it will be CGST plus SGST, or it will be CGST plus UTGST. From one union territory to another state, from one state to another union territory, or from one union territory to another, it will be IGST. Lakshadweep. Yes, we'll go to the union territories, which is applicable, which is not applicable. Pondicherry, Himanshu, reserve yourself, because there is some reservation for Pondicherry, Delhi, and one another union territory. Got it? Okay. Next, CGST, SGST, UTGST, IGST we have covered here. Yeah, this chart should give you further clarity. When it is within a state, within one state itself, CGST and SGST. Right? When it is another state within this state itself, again CGST and SGST. If it is within one union territory without legislature, we have union territory with legislature and union territory without legislature. Now we are talking specifically on union territory which is without legislature. Then within this union territory, it will be CGST and SGST. Right? Now from one state to another state, if there is any transfer, then it is IGST. From one state to another union territory, again it is IGST. And from a foreign territory to union territory, or from a foreign territory to the state, it is always IGST. From a foreign country to the state, or from a foreign country to a union territory, it will always be a interstate transaction leviable to IGST. You got it? Now, what is union territory with legislature, without legislature? I'll discuss, but for now, you understand this. What is the meaning of legislature? आपके स्टेट में स्टेट गवर्नमेंट है, correct? In union territories, few union territories, they have a government, and few union territories, they don't have government. Matlab, it is run by the governor. Generally, we have governor, but in such union territories, they are run by the president. Matlab, they do not have a legislative assembly. That is called as union territory without legislature. Import duty, correct. Import duty is customs duty. So customs duty is paid at the customs port itself. And I said when we import, we pay customs duty and GST. So we will pay customs duty and we will pay the GST as well. That GST, will it be UT GST, SGST, CGST, or IGST? It will always be IGST, because on any transactions, what you are doing, a import of goods or import of services, or export of goods or export of services, it will always be a interstate transaction liable to IGST. Okay? The legislative framework is CGST, is a single legislation for levying central goods and service tax. That is, how is the taxation levied? CGST is levied through the CGST Act. UTGST is levied for union territories without legislature, and SGST is levied for states and for union territories with legislature. इसका मतलब क्या हुआ? Union territories are divided into two categories. Okay. UT, Union Territories. You have UT with legislature and UT without legislature. Okay, two broad categories. When we say union territories with legislature, it has, जैसे Delhi. Okay, Delhi, Puducherry, and Jammu and Kashmir. These three union territories have legislature. मतलब वहां पे election होता है to find out the chief minister and to find out the other cabinet ministers, other ministers for the state. Now, this union territories with legislature have a government, so they will not be falling under UT GST Act. They will have their own SGST Act. जैसे दिल्ली में they will have Delhi GST Act. Puducherry will have Puducherry GST Act. Jammu and Kashmir will have Jammu and Kashmir GST Act. And union territories without legislature are Andaman and Nicobar. Okay. This I can't edit it since I've done this. Okay. So union territories with legislature are three: Delhi, Jammu and Kashmir, and Puducherry. They will have their own legislature, so they have their own GST Act. So union territory GST Act will not apply to them. The union territories which are there without legislature are, please note down, Andaman and Nicobar Islands, Lakshadweep, Ladakh, and fourth is Chandigarh, and fifth is the big four cities, Daman, Dadar and Nagar Haveli, and Daman and Diu. This is one union territory. Dadar and Nagar Haveli and Daman and Diu is one union territory. So totally 5 union territories without legislature and 3 union territories with legislature. For these union territories which are without legislature, they will have the applicability of UT GST law for them. So, because they do not have legislature, for them, it will be union territory without legislature. This will be 5, and union territories with legislature are 3. Got it? Okay, so union territories, like I will draw the chart again, then I think you have the clarity. Union territories, UT with legislature, UT without legislature. Okay. UT with legislature, we have 3. Okay. So union territory with legislature, we have Delhi, Puducherry, and Delhi, Puducherry, and third one is Jammu and Kashmir. Okay. And union territory without legislature, we have 5. Okay. I will tell you that 5. So this 5 are there. Now, union territory with legislature will have their own individual GST laws. मतलब Delhi will have Delhi GST law. Puducherry will have Puducherry GST law. And Jammu and Kashmir will have Jammu and Kashmir GST law. So any transaction which is done in Delhi will be leviable to CGST plus Delhi GST law. And in Puducherry, within the state will be Puducherry GST plus CGST. Okay. And union territory without legislature will have what? Union territory without legislature will have CGST and UTGST. So one UTGST law for each of these union territories, but for union territories with legislation, they have their own individual GST law. Got it? Correct. Union territory without legislation, the law, there is a charge because the SGST Act itself states that it is a law for the states and for the union territories with legislature. Chandigarh is union territory without legislature. So that is coming under 1 to 5 UT without legislature. SGST Act generally cannot be different. It will all be same itself because it will be approved by the GST Council where all the state government officers are sitting, state government, chief minister and finance ministers are sitting. So all the SGST laws will generally be same. Totally, there are 8 union territories, Jayendra, not 9. So what are these 5 union territories? These 5 union territories are Andaman and Nicobar, that is 1. Second is Lakshadweep. Third is Ladakh. Fourth is Chandigarh. And fifth is Dadar and Nagar Haveli and Daman and Diu. It is fully one union territory. 1 to 5 are those 5 union territories. So Krishna, I am telling again, Andaman and Nicobar Islands, Lakshadweep, Ladakh, Chandigarh, Dadar and Nagar Haveli and Daman and Diu. So these are 5 union territories without legislature. So these 1 to 5, we will apply UTGST law. Okay. Yes, Nilesh.
Sir, I have a doubt regarding transaction within UTGST without legislature.
Right.
In a UT, so in a UT without legislature, if the transaction is within the UT, at that time, what we will charge us? CGST plus UTGST or UTGST only?
CGST and UTGST.
Okay.
Similar to a state. If you are in the state of Delhi, sorry, not Delhi is not a union territory. If you are in the state of Maharashtra, you will charge Maharashtra GST and CGST. Same way, if you are in a union territory, you will charge UTGST and SGST and CGST, UTGST and CGST. Okay. So that is clear with our exports also, IGST also will be there, but it is exempted. Correct. When you make any import or export, you will have IGST only, but exports is exempted, so that will not be taxable. Classification of goods and services in the GST happens through the mechanism of HSN and SAC code, which means what? Every product will have a unique code called as Harmonized System of Nomenclature code. That is when you have all the countries have agreed to a common tariff code. It's called as Harmonized System of Nomenclature. So when you import any goods and you export the goods to any other country, that country should know what is the goods. You may be calling something here and something else may be called in that country. That's why every goods will have a 8-digit code which is called as Harmonized System of Nomenclature. So if you put that code and send it to the other country, that country will get to know by seeing that 8-digit number. Okay, this is the product which is coming. You may call in any terms, but it has to get tagged with the 8-digit code that is called as HSN code. So in the GST also, the GST rate is dependent on this 8-digit codes. Okay, so 8-digit codes was there for goods. So for services, what was there? Services, nothing was there. So they brought in something called as service accounting code for the services. So HSN is for goods and SAC is for services. Okay, then registration. Registration has to be taken in every state where you are doing business from. Okay, now if you are doing business from Karnataka, you have to take registration in Karnataka. Now from Karnataka, if you are supplying it to a customer in Tamil Nadu, should you register in Tamil Nadu? You don't have to register in Tamil Nadu because you can supply from Karnataka to Tamil Nadu and it becomes an interstate transaction. So you will charge IGST. You have to register in the state from where you are doing business, and you do not have to require a registration in the state where you are supplying it. Okay, just register in the state where you are doing business from. Now, if you are having a go down warehouse or a branch in another state, then you have to take registration there. You have to take a registration where you have your control, and wherever you do not have your control, but you have a customer in another state, that state you don't register. Only register in the state where you are having control on. SSC, how many digit code? Same 8-digit codes is SSC also. But generally, the rate for services will be 6-digit codes, but in detail, the description you will get for 8-digit code. Now registration. When will I register? As soon as I start my business, should I register? No. I should register once I cross some limit. So the government has given some threshold limit. And they've said if you cross this limit, then you register. Some are saying 40 lakhs. So the limit is not fixed. The limit varies on what you are providing. HSN is for goods and SSC is for services. Correct, Naveen. Now, what should I do for registration? I should remember something which we will read in registration, but very important for you to know now itself. There are 3 limits for registration: 10 lakh, 20 lakh, 40 lakhs. 10 lakhs is for certain small states: Manipur, Mizoram, Nagaland, Tripura. For these 4 states, if you cross 10 lakhs, you have to take registration. 10 lakhs if you are a service provider, 10 lakhs if you are supplier of goods. Both if you cross 10 lakhs, you have to register. TNMM. You know TN Manoran? Direct tax. When I used to write my exam, I used to refer to TN Manoran. That's why I remember this nomenclature called TNMM. T for Tripura, N for Nagaland, M for Mizoram, M for Manipur. For these TNMM states, the limit is 10 lakhs. Second category of states is 20 lakh limit. This 20 lakh limit will apply to whom? This limit will apply to another category of states. Here, 20 lakhs will apply for both goods and services. Okay. So, TNMM for this category of states. Second category of states is Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and Telangana. How will I remember these states? I have a shortcut here called as UP must. U stands for Uttarakhand, P stands for Puducherry, M stands for Meghalaya. Don't get confused with the other M, because there in 10 lakhs also there is M, here also it is M. Okay, here it is Meghalaya, Arunachal Pradesh, Sikkim, and Telangana. Here the limit is 20 lakhs, and rest of the states it is 20 lakhs for services and 40 lakhs for goods. Okay, TNMM for 10 lakhs, UP must 20 lakhs, and all the rest of the states apart from this 6 plus 4 10 states, the limit is 20 lakhs for services and 40 lakhs for goods. Which means what? If I am a dealer in a state of Karnataka, the limit for me, if I am a dealer in goods, the limit is 40 lakhs. Until 40 lakhs, I do not have to take any registration. If I touch 40 lakhs, then I have to start with the registration process. Clear? Yeah, any questions here? Monthly, no, the limit is annually, not monthly. This is per annum limit which you have to see. Yes, if the limit is less, then you don't have to register. But if you still want to register, you can register. No problem. Yes, Ashish, do you have any question? Time limit to file GST returns, we will see when the return comes in. The time limit is different. This is the time limit to register. In Assam, if I'm supplying goods and services both, then the registration limit will be what? So 40 lakhs is for pure supplier of goods only. If you are supplier of services, then 20 lakhs limit will come to you. Yes, Harinath, what is your question?
Yeah, is there any logic for fixing this 10 lakh, 20 lakh, 20,
No
40?
logic. The government had fixed 20 lakhs. Then some states said that we need a relaxation because by the time my citizen reach 20 lakhs, I will not get revenue. So they gave special permission for these small states. Then the government said we'll increase the limit for another states wherein 20 lakhs, too many registrations are coming. So we'll go to 40 lakhs. Then these special category states known said, no, 40 lakhs will become too much. We want to retain 20 lakhs. So it is each state's selection, there's no logic behind this.
Okay, thank you. And one more is union territory part. If transaction is happened between state and union territories, then both UT GST and that particular relevant SGST, that is only between states transactions, taxes are fixed, right?
No.
No CGST.
No, you have not seen the chart properly. This chart is there, no? So any transaction between union territory to another state, is a transaction of interstate and you have to pay IGST.
That is without legislature, yes.
If it is union territory with legislature, then it will be treated equivalent to a state.
That is between states only.
Correct. So it will be between states and IGST will be leviable.
Between states, union territory with legislature, that is
Union
treated as a
territory
state.
with legislature is treated as a state. So example, Delhi. Delhi is a union territory with legislature and Karnataka is a pure state.
Yes.
So any transaction between Karnataka and Delhi is a IGST transaction.
No UT GST or involved.
UT-GST will come only when it is within that union territory which is not having legislature.
Okay, thank you.
What are the benefits we get after registration? After registration, you can claim credit. Before registration, whatever purchases you're making on that, you cannot claim credit. Okay. Yeah, there are some more questions from a few more people. Harshdeep, Harshada Indap, your question is completed. Let us give opportunity to others. Okay. In case of imported goods, sir, is there IGST in addition to customs? Yes. On imports, we have customs duty and IGST. Ashish Bal. Vishisht. Okay, Ashish Bal, please talk.
Tell me the chapter name.
Can't hear you.
Tell me the chapter name, sir.
Sorry.
Tell me the chapter name, sir.
Chapter name. Manisha Prajapat.
Sir, I have doubt in that threshold limit.
Right.
So it's not a doubt. Actually, I want to ask a question. So, for example, I'm a supplier and I have supplied goods over the limit of 10 lakhs and given the services above 10 lakhs. So I will fall into that category. So I will have to give GST over those revenues. Is that what it means?
You are there in which state?
Say I'm asking about that threshold limit. For example, I'm within the first option that you're given at TMM. Yeah, there's
It is
Manipur,
not an
Mizoram,
option.
Tripura.
If you are in this state, it is not optional. If you are in Manipur and if you have crossed 10 lakhs, you have to compulsory register.
No, sir, my question is that this thing is applied over supply and over above goods.
Correct.
Okay, sir.
Vishisht Jain. Yeah, when there is a supplier who's crossed the threshold limit and the supplier is not registered, then what happens? Then he has to pay GST from his pocket. So this limit says that you register. Okay. If you do not register, the government will not tell that, okay, you're not registered, so don't pay GST. That is not a solution. So you have to pay the GST once you cross this limit. But if you register, you can collect it from your customer. If you do not register, you cannot collect it from your customer, but the liability will still be on you. Okay. If my place of supply is Maharashtra and supplier is from Maharashtra, but my registration is of Karnataka, but you're saying your place of supply is Maharashtra. But if you're registered in Karnataka and we'll come to the place of supply to understand that. Now it will be very confusing for others. Ruchika?
So actually, I have a doubt. Like, if I'm selling if I'm supplying the goods in various amounts, like 2 lakhs in one, 2 lakhs in second batch, 2 lakhs in third batch, is that a totally
Correct. The limits has to be calculated totally for the year, not on each transaction. The value is the value total sales for the year. If you touch the 20 lakhs, then you have to take registration. If you touch 40 lakhs in those other states, you have to take registration.
Thank you, sir.
So union territory with own legislature like Puducherry, they will charge CGST and SGST. You're right.
Good evening, sir.
Good evening.
Sir, I just want to ask that what are the impacts of registration?
There is no impact. It is a statutory compulsion that once you cross the limit, you have to register. The benefit is once you register, you can collect GST and you can claim the input tax credit. If you are not registered, you cannot claim the input tax credit and you cannot collect taxes from the government, taxes from your customers.
Okay, sir. Thank you.
Manish?
So one question is, while we have the limits to get it registered, company registered under GST, but if I have to pay GST to somebody else who's already having GST, but I'm not within the limit, then what's the point in having that kind of a limit that I have to get registered or I don't have to get registered?
I didn't get your question.
So indirectly, government is asking every other company either if you want to get the return, if you want to claim the GST, you have to get registered.
Correct.
Right.
Correct.
So suppose I'm a company, I don't fall under the purview of GST, but I'm working with somebody whom I have to pay GST. I cannot claim GST again. Correct.
Correct. Correct.
So there's no point in having this limit of. Even for that matter, if I have to claim GST, I have to get registered myself.
Not necessary if you don't want to claim, because to claim there are certain procedures to be followed and a lot of compliance needs to be done. So if you can forego your claim and you will not charge on your sales, then you don't have to register, because the impact is both. Once you register, you can claim the credit and you can offset that credit with the sales. But if you're not registered, both the sides you don't have to comply. You don't have to claim the credit and you don't have to charge GST. So that's the reason both the sides you will get the protection.
Thanks.
Let us assume that I am in Manipur. Okay. You are in Manipur and the limit is 10 lakhs. I do supply of both goods and services. In previous year, I made how much? I made 5 lakhs from goods and 7 lakhs from services. So this limit has to be calculated this year, not the previous year. Now, last year, if you have made sale of 5 lakhs from goods and 7 lakhs from services, last year itself, you are liable to register. So since you are liable for registration last year, you will continue the registration this year also. Okay. Fine. Last question, then we are done for the day. Yes. If a person who's not crossed the threshold, still if he is registered, he can claim the credit. Yes, he can claim the credit. Once you're registered, you can claim the credit. Yeah, Mohammed Sharif.
If we have like exempted goods like milk or any other product, exempted goods, when the threshold limit we cross the business, is it necessary to register GST?
From this slide, it is, but then there is a notification which gives exemption. Okay, in GST, we have to see the law, then we have to see the notifications to decide ultimately. So the law says you have to register, but the notification comes to our rescue, says that if you're doing only exempted services, then you don't have to register. Which means if I do 1 crore sales of exempted services, then I don't have to take the registration.
Okay, one more thing, sir. With the same GST registration, within the state we can do anywhere. We can open the branch and we can run the business, or we have to re-register
You
like
don't
other
have to
states.
re-register. If you have multiple branches in a state, with one registration, you can add all those branch addresses and continue it. But if you want special separate registration, then you can take separate registration. That's optional.
Okay, okay, fine. Thank you.
Okay. We'll continue on Thursday. All the questions which is pending, we will take it up and we will continue on Thursday. Yeah, on the link also, Padmashri, it's not working now. I will share it on Thursday itself. Thank you very much.